On Monday, March 10th, the stock market took a sharp decline. How has Wall Street reacted since Donald Trump was elected? Let me explain. Major stock indexes like the Dow Jones and the S&P 500 posted their worst day of the year, with the S&P 500 sliding 3.1%, making its worst week since September. These are stock market indexes which track the performance of a group of companies, giving us a snapshot of how the market is doing overall. The Magnificent Seven, a group of tech giants that have dominated the market in recent years, Alphabet, Google, Amazon, Apple, Meta, formerly Facebook, Microsoft, Nvidia, and Tesla, were all in the red on Monday, March 10th. These companies, known for their innovation in the tech world, experienced varying degrees of losses, some dropping significantly. Tesla, in particular, saw a massive drop of 15.4%. Since Donald Trump's election, Tesla stock has taken a hit, partly due to falling sales in Europe and backlash from both European and American buyers. Some have even taken to calling for a boycott of Tesla. Trump responded to this on March 11th with a post on his social media platform Truth Social. The radical left lunatics are trying to illegally and collusively boycott Tesla. I'm going to buy a brand new Tesla tomorrow morning as a show of confidence and support for Elon Musk. Market experts are pinning the stock market change on both an interview Trump did with Fox, where he expressed uncertainty about his economy, as well as his economic policies, which have proven to waver from what was promised. In a recent Fox interview, Trump discussed his plans to bring back wealth to America, but at the same time expressed uncertainty for the future, saying, "I hate to predict things like that. There is a period of transition because what we're trying to do is very big. We're bringing wealth back to America. That's a big thing." Analysts suggest these comments about the future made investors uneasy. For example, a chief market strategist for Ameriprise said Trump's comments unnerved investors who were already unnerved. Trump's imposed policies also contribute to market uncertainty. For example, Donald Trump has been touting tax breaks that would help the lower and middle class, such as no tax on tips. However, the Republican-backed tax plan that passed the House, which planned to cut about $4.5 trillion in taxes over the next decade and also raise the national debt ceiling by $4 trillion, had no mention of anticipated Trump promises like no tax on tips. The international tariffs imposed by Donald Trump have proven fickle in their implementation. Trump has been vocal about tariffs on Mexico and Canada, but recently he postponed the 25% tariffs on these countries, pushing back the date until April. This type of back and forth on trade policies has added to the market's instability. Ruth Fox Blader of Fox Capital reported to BBC in response to the chaotic market day. Investors were reacting to Trump's policies, but also selling tech stocks they felt were overvalued. Tariff talk, reversal, speculation, and chaos only fosters uncertainty, David Bahnsen, chief investment officer at Bahnsen Group, said to CNN. An index created by Scott Baker, Nick Bloom, and Stephen Davis measured what uncertainty means for the stock market. They measured the frequency of newspaper articles referencing the economy, policy, and uncertainty, which recently broke a record surpassing that set in 2020 amidst the lockdown. In response to Trump's economy, investors are reacting to uncertainty. As Mohammed El-Erian, a financial expert, said, investors were initially excited about Trump's promise of tax cuts and deregulation, but they underestimated the likelihood of a trade war and the long-term impact of tariffs. What do you think about the recent change in the stock market? Let us know in the comments.